Good morning, everybody. It's your Daily Crypto News. It is Thursday, March 19, 2026. My name is Matt. Let's take a look at what's happening around the news today. Bitcoin broke below $70,000. The Fed is holding off rates, which in my opinion is the right choice with trade and what's happening in Iran. If you cut the rates and encourage more borrowing and spending, inflation could hit double. So it's the right choice, wrong choice for our bags. Ethereum also followed with a decline. It's heading to $2,000 in that range. We have the Fear and Greed Index heading to around 33, and Bitcoin's ETF inflow streak snapped with around $164 million in outflows. Everybody said, hey, no rate cut, let's take our money back. Looking at some regulatory and oversight developments, the SEC approved Nasdaq's pilot for tokenized securities trading, enabling blockchain-based versions of stocks with traditional settlements. Big step for institutional and TradFi integration. The SEC interpretation of it clarifies most crypto assets may not qualify as securities under federal law, aiming to reduce enforcement uncertainty and provide clearer guidelines. And this is amid not having the Clarity Act, but the Senate Republicans are pushing for the Clarity Act. It's a crypto markets structure bill, and they want to have it passed by May, with key committee votes happening in April. And South Korea's opposition party proposes scrapping a 22% crypto capital gains tax. There is set to kick in 2027, and the ruling party is open to review it. Let's see what happens there. Looking at some institutional and corporate moves. Crypto.com, it cut 12% of its workforce, and it wants to pivot into enterprise AI integration and efficiency gains. And this is when the industry is shifting. We see a lot of crypto miners are turning to AI, using some of their GPU and compute for AI. And is this just the next big thing? Is AI the next, I don't know, DeFi, ETF, meme coin, whatever? Is this the next just thing that's going to make people money? And then is AI going to just shift to something else? I don't think AI is going anywhere. It's just too damn useful and too damn good. But will the market kind of like follow the pattern of, say, NFTs? FTX Recovery Trust is set to distribute $2.2 billion to creditors by March 31st, a major milestone in the bankruptcy proceedings. OpNet is unlocking native smart contracts and yield-generating DeFi on Bitcoin's mainnet, tackling a key limitation for Bitcoin's ecosystem. And capital flows increasingly into stablecoins, USDC and USDT, as safe havens during the Bitcoin pullback. So basically, people are seeing that there's Bitcoin's pulling back. They're putting more money into USDC, USDT. Also, you people in the Middle East are trying to figure out how to send money quick and fast, and stablecoins is the way. Everybody should have known this by now. It's been a decade. People have been talking about this. Like, banking just cannot, and will not. And honestly, a lot of it's regulations. A lot of it's anti-money laundering, AML sort of, the rules that have to be in place, and it have to be in place. But at the same time, really hinder people for doing stuff with their own money. Again, actually, I don't even know if they have to be in place. But there's a lot of bureaucracy, a lot of paperwork, a lot of rigmarole to send your own money somewhere. And what happens is you're trying to combat on money laundering or terrorist financing, and it just basically charges everybody more money. It's a huge industry in itself and restricts your freedom to do things with your own shit. Security and enforcement highlights. GitHub's phishing campaign targeting OpenClaw developers to steal crypto wallets is underscoring rising risk for blockchain builders. Imagine that. That's so interesting. And Venus Protocol's XVS token plunged 9% after an exploit, creating bad debt in the lending platform. Some other notable stories. Bhutan's moved and offloaded around $72.3 million in Bitcoin during the downturn. Proposed rules could threaten stablecoin yields, Coinbase and USDC's revenue, though loopholes may protect some models. And in broader macro, we see oil spikes and Fed pausing, and it makes that there's going to be aversion across market assets. Basically, numbers inflating, oil's going up, Fed's not lowering the rates. People are just going to be in a holding pattern, which is, again, probably for the macro good, for our bags bad. Let's take a look at those crypto prices. Bitcoin, $69,330. Boo. Ethereum, $2,130. XRP, $1.44. BNB, $6.38. Solana is at $87.97. Tron's at 30.2 cents. Dogecoin's at 9.2 cents. And Hyperliquid, again, still sticking in the top 10 at $38.71. Everything is down today. There is some ups, but not many and not by much. That's your daily crypto news. My name is Matt. Happy hodling, everyone.